Good morning, this is Tim McGowan for the Finance News Network. Stocks rose Wednesday, trying to shake off a three-week slide as rates and oil prices eased, cooling investor concerns around continued high inflation. On Wednesday, the Fed Reserve gave its summary on current economic conditions known as the Beige Book. The report showed that economic activity was little changed in many regions across the US and the growth outlook remains weak. Overnight, the Dow Industrial Average gained 1.4%, the S&P 500 rose 1.8% and the Nasdaq tipped up 2%. Stocks rallied as Fed Vice Chair Lael Brainard reconfirmed that the central bank will do what it takes to stifle inflation, while also noting the risks of going too far. Many traders decided to focus on the latter point from her speech. Markets have been hoping that the Fed would start to hand out smaller increases starting in September, but at one point during the day they were pricing in an 86% chance of a 0.75% basis rate hike. Across the sectors, energy struggled as oil prices fell by more than 5% on Wednesday to their lowest level since Russia invaded Ukraine on demand fears stoked by looming recession risks and downbeat Chinese trade data. Best performing thematics included high beta plays such as hydrogen, EV charger, lithium, social media and solar stocks. Now, behind the strong US economic markets, the economic war over energy continues to play out in Europe. Goldman Sachs said this week in a report, "In our view, the market continues to underestimate the depth, the breadth and the structural repercussions of the crisis. We believe these will be even deeper than the 1970s oil crisis." Across Europe, the energy system is already stretched to breaking point. No excess capacity exists today in the sector. Rivers are dry, high temperatures are boosting electricity demand, which in turn requires increased amounts of natural gas at the margin. This has prompted a switch back to coal for countries like Germany, where such capacity still exists and supplies are available. Last year, nearly 40% of natural gas used to heat homes and power businesses throughout the European Union came from Russia, one of the continent's largest and most important trading partners for energy. Now, barely half that amount enters Europe. A complete cut-off from Russian gas would push Europeans' energy bills even higher and hit the region's economy even harder, with experts projecting a potentially deep recession in the most exposed countries. A complete shutdown would subtract nearly 3% from Germany's economy next year. The expectations are for a winter from hell across Europe. On the currency front, one Australian dollar has strengthened compared to the US dollar yesterday, buying 67.69 US cents. On the commodity front, iron ore futures are pointing to a 0.7% gain. Gold was up nearly 1%. Silver was up over 2%. Copper dropped 0.9%, and the oil price dropped 5.7%. On the futures front today, the SPI futures are pointing to a 0.4% gain. This is Tim McGowan for the Finance News Network. Have a good day.